Very good morning, everyone. Welcome to Admiral Markets. Thanks for joining us today. We're going to take a look at the market live action on the Forex pairs and other instruments in just a second. First of all, though, be aware that this video, or this live webinar, I should say, but also if you're looking at the recording, is shown to a global audience. It may not be suitable for everyone. Take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity to find out more about that and other details. It is also important to note that trading for exchange and global financial markets is high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. Plus, by continuing watching this webinar, you agree with this disclaimer and you're aware of the risk involved when trading. All right, regarding the economic calendar, we had some red tech news events in China and Japan. We have some news events today as well. Euro GDP growth, for instance, and some lighter news in the US and in Europe as well. So be aware of that. Always take a look, especially with any type of trading. It's good to keep an eye on these news events to see how that can impact your trading. Regarding the volatility of yesterday, Monday is typically a slower day on average than Tuesday, Wednesday, Thursday, Friday, the same thing. And that seems to be holding true yesterday, although pretty decent on the odds. We see many of them were within the half percent and not that much movement. Euro pound being the slowest and least volatile, pound New Zealand being the most volatile, and the biggest mover was probably odds we see to the upside and Swiss yen to the downside, as you can see. So that's some things we can derive from this. And you can see the pound being the biggest mover here against the yen, odd, New Zealand, and indeed pound number one. Number two, Aussie. Dollar is typically not on the higher end of the movement recently. It's often the pound and actually the Aussie indeed second. All right. Let's take a look quickly at the fundamental. You can see on March 7th, that was yesterday, to cut or not to cut. There's an article here that might be interesting, your weekly fundamental view. So there's a lot of information here on Admiral Markets website that you can find regarding analytics, not only fundamental, but technical and wave too. So make sure to take a look at that. You can see here some information and extra data about ECB. All right, this is from Darren Sinden, our main man on fundamentals. So I think if you're interested in fundamentals, then you'll certainly enjoy taking a look at what Darren has to share on a regular basis. So that's just yesterday afternoon, so just very fresh. All right, last but not least, if you're interested in finding a useful way to trade the markets without downloading anything, you can do that by using the MT4 web trader. In fact, very simply, just click on it and you'll be able to access the markets very soon by clicking on Launch MT4 Trader and logging in, and that's it. So it's pretty fast. There you go. There you got access to the chart. But we're going to take a look on the software this time around and use basically MT4 Supreme Edition, which has a lot of extra features to make trading life a bit easier. We'll show a few of them as we go along, as we take a look at the market. So let me open the charts here and drag it over to the screen that hopefully you can see it. Alrighty, good. So we got a lot of things to discuss as always. Euro dollar in yesterday's recap video that I share on the wave analysis section, I was talking about an ABC zigzag back to the fibs and then a bounce at these fibs for upside. That is indeed happening, and price is making a rally as we speak. So maybe some of you joined that advice that or not advice, I shouldn't say advice, but joined my analysis that I made for myself, but I shared also through that video at roughly the 50 fib. Now, kind of just missed that 50 fib by a tad, right? If you're looking for price action signal, then this candle was the strongest one, and that was a pretty decent candle. It was towards the end of the day, though. So it took some time before that happened, but we did get an ABC zigzag. You could put also a fib from here to here, right? And look for the minus 61.8 target. And that's where exactly it turns. Sometimes those targets actually are a better and more precise indication of a turning spot than the fib retracement level. And that holds true here. But it was very close to the 50 fib anyhow. Typically, they're pretty aligned. They're pretty close to each other. So they give good compliments. In fact, we had that yesterday with the target and the retracement fib at the same spot. So anyone who took that trade right there, I didn't expect the 61.8 fib to be broken. So the stop loss could have been below this wick, for instance. Could have been one way of approaching it. And the target for the moment is the minus 272 target at 110. 111, sorry. Is anyone in that trade by any chance? Now, if you're not in that trade, if you are in that trade, no reason to keep the risk open, move to break even, and try to ride the profit to 111 or 111.75. Both could be good targets. And put a break even so the risk is off the table. If you're not in that trade, there's perhaps a potential to take a scale in extra trade here as it continues its march higher to 111, 111.75. Now, how would that be done? Of course, the scale in is typically a bit more risky because we're getting closer to the target, so there's less space available. But I think that there's still a good opportunity. Let me add some of these moving averages. Excuse me. Alrighty. Let's take a look at the lower time frames. On this 50-minute chart, we actually already had a pullback to those moving averages, but that's behind us. I think that probably the only chance I can see for a potential entry is probably just looking at this hourly candle. If an hourly candle like that, ideally, of course, the trader is already in the long, to be honest, but a candle like this could be a good signal of continuation. Let's take a look at the 4-hour chart, or maybe even a 4-hour candle. We do have Eurozone news, so maybe looking at this 4-hour candle. If the 4-hour candle closes something like that, waiting for retracement, a bit of retracement of that candle, that could be another way of scaling in a second position or the first, depending if you took that trade or not. So maybe the 4-hour is better because we do have a news event. And we're pretty close to these resistance spots. So 1-hour chart could be a bit shaky, as you never know, of course. I mean, this is up momentum at the moment, but we are bumping into a zone of resistance as well still. We haven't cleared all that resistance as yet. So don't want to be too decisively bullish either at this moment. Yes, we did break our resistance here. Obviously, we broke this resistance no matter how you draw it, right? That's clear. So that's all good and done. We got still some horizontal resistance here. We bumped off support right to the upside. So that's all good. That's all good for the bullish side. If we put a fib from here to here, price could retest easily the 50 fib at 111 or the 61.8 fib at 111.75. That's why I was talking about those targets as well, because those are fib retracements when placing a fib from bottom to top. Now, is that an important fib? Well, it's certainly not unimportant, because if we look at the last month's monthly candle, we got a big wick last month, right? So that could be a sign of exhaustion. That's why breaking last month's high could be a bit of a struggle, might be not as easy to do that, right? We got a lot of resistance up in here as well. So this could be just a retracement of that wick, and we might bump into resistance. That's why I do think that putting a fib from this top to this bottom makes sense because of that monthly wick. Nothing wrong with that. There was also a pretty good impulse to the downside. So this upside could just be a retracement of that downside, something we have to really consider to be very possible. So from that point of view, any upside break above this trend line makes sense, but we got to be careful at 111, 111.75. That's where price could turn back down. All right, so from that point of view, even here could be resistance, right? Because of these tops in here and here. So looking at this 4-hour candle and seeing how does this 4-hour candle react to those levels will give us a better clue. Is it strong? Is momentum strong enough to really push through those resistances or not? All right, so I think that that's about it from the Euro point of view. In that trade from yesterday that I mentioned for myself, move to break even and potential new trade, I think if this 4-hour candle closes properly. Shorts, if you're interested in looking for the downside, I think 111, 111.75, if price action stops and shows signals of struggle, could make sense. But got to be careful, of course, if price gets there. Always see how price reacts to those levels. If price goes sideways, might want to be careful because it could be just a bull flag for one more break to the upside. Always be careful, not only if price respects a support or resistance level, but how does it react to it? Alrighty, if you have questions, let me know. Pound USD is basically pushing a lot further than I expected. And yesterday I was saying that I would like to see a break of this bottom and a pullback and continuation. That did not happen. I did also say that if this trend line breaks, there could be some space up to the 61.8 fib. I think that in my webinar, in the video yesterday, I had this fib. When I use wave analysis, actually I have a bit of a different fib. In that case, I use this fib, I think, from here to here. And then price, you can see, hit the 61.8 fib. So that's just a tad of a difference there. Because in wave analysis, this is the current formation. This is a wave 4 potentially. It's a pretty deep wave 4. Doesn't typically go to the 61.8 fib. So it doesn't really matter a lot. Probably not much. I mean, if we fib it from here to here, or here, there's not much difference. Here we see that prices still has some space to the 61.8 fib. Here we see the price has already hit the 61.8. So just a tad difference. So what is going on here? Is this a retracement for downtrend continuation, or is this a trend changer? So let's take a look at some higher time frames, because we're not going to solve that question by looking at the 4-hour chart. Then we'll dive back to that. For the moment, when we're looking at the monthly, last month was a bearish candle. I don't necessarily see any reason to change the bearish outlook. Last week did have a bullish candle though, and we already broke last week's high, which probably makes sense considering last week's bullish candle. Daily chart, we've had a lot of daily candles up to the upside in a row, so would like to see this small trend line break with the low of yesterday basically breaking before I think there's a better chance of downside. Oh wait, I forgot to look at divergence. 1 second. All right, daily chart does have divergence between these bottoms, right? So that's something to be cautious of. There is a single divergence between these bottoms. Now, considering the strong momentum, that might not necessarily mean the end of the downtrend, and it could just be a pause. Too soon to say if weekly has divergence, not yet. And actually price has gone back to the 21 EMA band. So at any point, sorry, this 21 EMA this 8 EMA changes down, and we have a daily candle that engulfs yesterday. Like today, if we get an engulfing twin today, and the 8 EMA turns back, that's actually a potential reason to see a downside continuation. There's only one caution though. If price goes too slow in going down, there could be a bigger A, B, C rally because of the divergence. All right, so price is back at the 21 EMA, so there's a high chance that eventually here or just a bit higher, price will run into a resistance and make a bit of a dip. But the question is, will it make a trend continuation, or is it going to be a dip for more upside to higher resistance before then it makes a bigger downside again? So when we analyze the path of least resistance, there's a good chance that we're going to bump into resistance here, make a dip, but the question is it downtrend after that, or will it be a bigger bullish zigzag before we bump into the resistance level that's strong enough to really send it back lower? So from that point of view, what level could do that? Well, these fibs obviously could send it. So from my point of view, we're still in a very strong resistance zone. This box right in here as well. We got a fib. We got long-term moving average. Excuse me. So if it's not going to be here, it will be a bit higher. I don't think that, eventually this is going to run out of steam. We have divergence now between these tops. Only a single one officially. On a 30-minute chart, it would probably be double by now. So I don't see much cause to be bullish. Now I'm not jumping in downside trades yet because this is a pretty strong price action signal. It's a pretty strong bullish candle, to be honest, and we only have a couple of small candles next to it. I'm not jumping in the long, but I'm certainly not liking this short as yet either. And I'd like to see at least this 5 to 6 candles not breaking this high. Excuse me. All right, so because we've had so far this is one momentum actually. Each 5 to 6 candles has been breaking higher high, higher lows, or higher highs specifically. So I would like to see 5 to 6 candles not breaking this high. I would like to see perhaps price on a 4-hour chart pull away from these moving averages, hook back, and try to look for continuation somewhere in here. All right, so 5 to 6 candles is the minimum for me to get interested. Otherwise, I'm very cautious with going short against this momentum. I'm also not jumping in a long because of the long-term resistance. Now, if this starts to push and push higher, and there's another bullish candle today like that, and another one like that, then I'm throwing the downside out of the window. In that case, I will be neutral for the moment. Probably look for a bit of a bull flag back to the moving averages and try to see if there's a bounce and a break perhaps for upside up to this long-term moving average here. So I think I'm going to be very cautious and tactical with this pound, and really wait till something decent sets up. Either it turns here and shows the strength, the weakness to the upside, or upside is just so strong and it keeps pushing up. Well, then I forget the downside. I look for a bull flag and I look for continuation. All right, because at this moment it's just too soon to tell. I don't want to predict. I want to try to react basically to what the market is doing. So what I'm here saying is, market, you decide which way you want to go, and when you decide it, then I'll try to trade along with it. All right, dollar yen. Big triangle. I'm actually still in this short. I shorted it right in here. And still in that trade. Stubbornly long at this moment, but I just, when looking at the chart, considered the fact that the triangle basically that I shorted the dollar yen, sorry, at the top of the triangle, I thought that it was a pretty good position, and I thought that the triangle would kind of favor my trade plan here and help me with that approach. So although I probably gave it a bit more time than I usually would, I think that the triangle was the extra factor here that made me stay in the trade a bit longer and not worry about that. Eventually, I did move it to break even, and that was when price started to break this trend line. I put the stop loss above it. There's no reason to stay in it. Once we have the break, that's fine. That means it's going our way, and if it suddenly turns and I don't want to be in that trade, that's the moment that I said, okay, here, now it's enough. Now it's time to get out of risk. Basically, what I saw when I took the trade was an ABC zigzag. I saw a momentum my way, and I saw a pullback, and it looked like a head and shoulders as well right here. I saw the potential for a zigzag like this, and I saw potential for a zigzag the other way around. And I saw, of course, big momentum here. I saw a three-wave correction like this. So it seemed like all factors lined up for a short right there, where I have the second red arrow. Now, obviously, I was saying that it would be great if price made it up to these fibs, because then maybe it's even better. But at this moment, right in here, I didn't consider that likely anymore. This was 1, 2, 3, 4, fifth candle as well. So this momentum seemed to be over. Price did break this top. That was the minimum I wanted to see because of that zigzag that I expected. So that was okay. Now, in the meantime, price has broken this trend line. So this is a good 4-hour breakout candle. And anyone who took an extra trade, perhaps, upon the retracement of that candle at the 50 fib could be up 30 pips by now. Anyone who took the trade where I did, I think, let me take a look. It's up 120 now at the moment. I think a stop loss just above this candle high is okay for a breakout trade using this candle or using a retracement to this 50 fib. That's fine. The wider stop loss is up in here. All right, let's see. Anyone who did not take this trade, let's see if there's any chance to talk about that. 1, 2, 3, 4, 5, 6 candle. So let's see if this candle can break this low. If the current hourly candle breaks below this low, then it looks like we're just continuing lower and lower with a downtrend, really. Downtrend channel here. Now, if it fails, there could be a chance of a zigzag. In that case, a short at 113.38 here might make a lot of sense because that's a target and it could be a zigzag. That could be the turning spot. So that's one level to look at, 113.38, I think. If it doesn't get there and price starts to drop, then in that case, let me put on the moving averages. Well, in that case, I'm not too sure, to be honest. If it's still doable, maybe the 15-minute chart. I'm not sure. I think it's possible if it breaks and then pulls back to the moving averages again, something like this, for instance, and then turns again, right? Something like that could happen during the day, but it's already speculating so much in the future that it's a bit difficult maybe to comprehend, I guess. But another pullback to the 21 EMA, if it falls for a decent bit, if it shows something like this, right, and then it shows like that, and then turns around here again. Something like this, where it did here, right? Zigzag down, zigzag up to the 21 EMA, and then a turn right here when the 8 EMA turns, failure to continue with the zigzag, and down it goes. So something like that might be valid in the future again later today. But for the moment, I think, depending on how this hourly candle behaves, but if it does bounce here, I think looking for a resistance up in here, I think makes a lot of sense. Stop loss, I think, could be above 113.50, which is this candle high. All right, pound yen. Talked about a short up in here. Actually, we talked about a short up in here too, I think it was, wasn't it? No, it was here, sorry. In any case, all of these were ATMA, or actually price pullbacks to the 21 EMA. 4 of them. All right. Now, with the 4th, there was a specific reason why we were actually very careful. And that was divergence, right? When you look at the bottoms, here and here, the 4th setup, there was clear divergence present, which is therefore extreme caution and warning, right? Especially on a 4-hour or higher. Similar to what we have now in the pound USD. You just have to be realistic that that is now occurring on the daily chart because of this strong pullback to the upside. So similar like the pound yen, any turn here, we got to be careful that it doesn't. Got to be very strategic about this because it could make a bigger ABC zigzag. Same happened on the pound yen. We had divergence between these bottoms. The oscillator turned here. We had a correction. This turned to be a correction of the correction, and we have one more push-up. And I was already saying here, remember that, so we talked about a couple of good shorts here, but we also talked about the reversal long right in here. Why? Because we were saying last week that, that if there are a couple of candles above this 4-hour 21 EMA, that is showing good momentum, that is showing a break to the upside, and there's a good chance to go up to these targets in the long-term moving average. And it did that. It filled this space between the 21 EMA and the 144. Do you see that? It closed that space. It closed that gap neatly. So there was a very good reversal trade right there. The first move up within that reversal, then the second move up down within that reversal, which was a correction, and then the third move going up to that, fill that space. And that's the difference that divergence gives us a heads up, right? It shows good with the trend setups here when looking at these moving averages. Pull back to the 21 EMA, turn around. Here too. But the divergence was a key difference here. And that showed that this downside is not maybe a normal downside or with the trend downside. It's a correction within a bigger ABC zigzag. And I was saying move the stop loss below this candle low. That survived, and there was basically all this upside to grab, depending on how you managed it. Right up to the minus 100,000 target, right? Right here. Stopped at the 61.8 target, stopped at the minus 272 target. but eventually went all the way to the minus 100 target. So what's next? Now we already reached the target of divergence on the 4-hour chart. So let's take a look at the daily. Technically, the daily does not have divergence. I know, we came very, very close here to getting back to that middle line, but we just missed it. If you really want to be strict on the rules here, there is no divergence actually. That means that price has already gone back to the 21 EMA, and there's a good chance of trend continuation. And we don't have to necessarily expect it to go up to here because there's no divergence. That means that this pullback to the 21 EMA could be all that price does. All right. And if we see price doing this, and this, break, pullback, continue, I wouldn't be surprised. So we can put a fib from here to here. We hit the 38.2 fib plus the 21 EMA. Target minus 272 target. So we could do something like this. And then there will be divergence, and then price could perhaps go back to the long-term moving average. So one signal could be a daily chart, the 8 EMA changing, like here, could be here too. If the daily candles are going too slow to the downside, like this, or there's any indecision, it could be good to move it to break even because you never know. That could be weakness as well right here. This is a very close difference, so want to be careful with that. So from that point of view, this is definitely getting into an interesting resistance zone, just like the pound USD. Now the 4-hour chart is not really aligned for a short right now because price is above the 21 EMA. It's also not aligned for an upside because it's right at the long-term moving average. So it's squeezed in between support and resistance. So what I would like to see is a good 4-hour candle, perhaps close like this. A couple of 4-hour candles below it, in fact. Make a bit of a hook back to that same 21 EMA and look then for a turn. That, I think, is the most interesting way of handling this pound yen. The same thing happened with the euro yen. Euro yen, we talked about this breakout trade here a few weeks ago. There was another one right here. All right, and there was another one here. But why was the third one again different? Because of divergence. And indeed, we got an ABC zigzag, just like the pound yen. So it's the same story really as the pound yen. Aussie made a bit of a bull flag and then continued up to its targets, getting very close to 75. Just missing it by a tad. That was the main target in my video yesterday, the break of this bull flag, 74.11, 30, for about 60, 50, 70 pips to this target. Yep. Hang on, let me get that back. Is anyone in any trades at the moment, actually? Anything you want to take a look at? All right, there we're back. So the Aussie, very, very strong momentum here. Very, very powerful. No divergence between these stops. So I'm definitely, yesterday's continuation was only a part. I think there's still going to be more upside to come. When you look at the 4-hour chart, it just looks very momentum. You can see the oscillator rising dramatically. You can see price action staying above the 21 EMA, very long, showing its strength. Therefore, so any pullback on this 4-hour chart to the 21 EMA, all right, like this, and then showing price hitting the 21 EMA, and then the 8 EMA turning down, but then back up again, right? I think that could be an interesting setup here for upside on the Aussie. I don't think that there's anything wrong with it. Yes, I was talking about this target, but this 61.8 target doesn't mean everything. It could, of course, stop price for a while, and it's doing that already. But doesn't mean that price cannot go up to the minus 100,000 target, right? Did I say minus 100,000? I meant minus 100 target, sorry. All right, so there's nothing stopping that necessarily. There's that space right there. If price breaks above this level, if price manages to break above 75, it could do that. And when looking at this momentum to the upside, I think there's a good chance it will. I think there's a good chance of a pullback and continue one more time. Yesterday's pullback was actually just one of the pullbacks, I think. Why? Because the momentum is just too strong. I think that resistance is not powerful enough in this case to stop that momentum. And let's see, maybe if price manages to go up a bit higher here again, like this, and I'm sure there'll be a bit of pullback, but if it keeps up, if it stays here long enough, there could be actually a good, a few weeks from now, there could be a good chance that it might even rally higher up to the long-term moving average. Why? Because it could be filling up this space between the short and the long-term moving averages. Right there. That's too soon to say, but last week's bullish candle is definitely an indication that this could be setting up. All right, but that's further down the road. For the moment, I think that we could have a retracement, one more continuation. Then we'll probably see a bit of a deeper retracement back to the 21 EMA here, and perhaps one more push-up. Let's see. That's further down the road. All right, so once again, just to summarize my thoughts, I'm looking for price to hit the 21 EMA. That's the first thing I need. I need the 8 EMA to turn down. Then I need price to bounce up, and I need the 8 EMA to turn up again. That's what I'm looking for on this odd USD, on the 4-hour chart. Iron is in a euro pound down. Sorry, I thought euro yen. I misread that actually, so it's not. This is not the right one. Let's see, euro pound. Here we go. All right, got bullish monthly candles. Weekly chart back up to the long-term moving average. Last week was very bearish. Engulfing twins. Could be the first signal that price is, going to make a bit of a retracement back down. Indeed, we are at long-term moving average, so that's possible. At least back to, for instance, the long-term moving average here. Now we don't have any divergence between the tops, but in this case we do see a bit of hidden divergence between these tops right here. So, well, I guess it's not ideal for downside. I mean, it would be good to have divergence, but the 4-hour chart does have that. So let's take a look at the 4-hour chart. All right, but the problem is the 4-hour chart has already reached the goal there, right? So I think it depends where the short is taken. At this moment, it's a consolidation, and it could really move up from here as well, or it could break and continue lower. Indeed, it's kind of in a triangle. Moving averages are on top of each other. Price has already gone to the long-term moving average, which means that this divergence, between these tops has already reached the target. So it really depends where the short is taken. If somewhere the short is up in here, you got it at break even, that's great. And indeed, it might get break through and continue. If not, then at least you have break even. Here at this moment, you see the price is still at the 21 EMA. And that could be a bouncing spot. Why? We had a couple of days down, but don't forget the uptrend is still up. So we could still see a push up. Failure around here, for instance, head and shoulders, and then see this down move. And then perhaps see support again. Why? Because 21 EMA is here and price can get basically squeezed in between resistance and support. We got resistance up in here, but we got support down in here. So it could see some squeeze movement like that, right? That's why we still might find support lower. Could price also retrace just a bit of that engulfing twin? A bit more? Yes. Wouldn't be surprised either. So I don't trade the euro pound, but if I would probably, at this moment, think there's a better chance of a rally up to resistance and then a good chance of falling from there. And then a good chance of bouncing lower. Fib from here to here, price can rally up to the golden ratio, the 78.6 fib, then fall down to these targets. Those targets then, in turn, equal to the 21 EMA on this daily chart, which could be bouncing spots. All right. Pound odd. Last week we're talking about downside and potential scale-ins and my trail stop idea of putting the stop loss above here. This candle high succeeded. Price continued lower, all the way down to 190. That was the target, the main target. Price bouncing off that target. Now there is divergence between these bottoms. So that downside trade worked out very nicely. And wherever you got in, I'm not sure, 194, 194.50, there's 450 pips to the downside. Some of you, like Beverly, I'm not sure if Beverly is in today, but even trading it from on her own initiative from way, way higher here, right? Amazing trade. And I remember telling her to aim for 200, or not telling her, but advising or saying my thoughts, and but she kept holding it all the way to 190, and it did get there. Amazing run. So there was a potential short here at the 21 EMA and here at the 21 EMA, but now there's divergence, isn't there? And you can see that is typical with wave analysis too. What do you have with wave analysis? What is impulse? 5 wave movement, right? So 1, 2, 3, 4, 5. Where are wave 2 and 4? At the 21 EMA. Is wave 3 stronger than wave 1 on the oscillator? Yes. Is wave 5 weaker than wave 3? Yes. Divergence. Wave 2 and 4 at the 21 EMA. So it's a pretty handy rule, not rule, but wave structure or market structure you can use just by using these moving averages. You're kind of looking at waves indirectly without even knowing it. Right? Well, that's just the benefit for those that don't like waves. You're still looking at the waves, but you just do it automatically. Great, right? So now we have divergence between wave 3 and 5. What is the target? The long-term moving average, right? So from that point of view, I think we're getting into a situation on the pound odd where I'm not looking for shorts, but there's a potential environment here that I think that could be ripe for a reversal to the upside, right? Reversal trades to the upside. What I would like to see is price break above this 21 EMA on the 4-hour chart, make a bit of a flag like this, and then continue. Similar to what we had last week on the pound yen. So there, from my point of view, there's good reason when I look at the pound odd and odd USD to say, okay, this odd strength seems to be probably, I think, for the moment, maybe my best trade idea. But let's take a look at euro odd and see if we have the same. Do we have divergence on the euro odd? And this is a cliffhanger because, well, technically not, I guess, but it's so close. We could see that this is such a incremental difference that it's not a lot of strength. There's not a ton of strength in this downside either. Despite the lack of divergence, technically, we can see they're kind of equal to each other, right? And therefore, similar, kind of following along the pound odd here in its feel and movement, I would say. So yeah, it looks like Aussie has a pretty good, despite the, but actually here we're looking the other way around. Actually, we can look for Aussie strength here, which would mean pound strength here if it goes up. So that's actually the opposite. Sorry about that. So euro odd here is actually showing out strength, of course, euro weakness. And here pound odd is showing pound weakness, but because of the divergence, we would expect perhaps the pound to rally. Well, it all depends, I guess, on this pound USD a bit as well. What does it do at the 21 EMA? That will give us some indication about what it will do here at the 144 EMA. Both are resistances. That doesn't really dovetail, doesn't really match up or align itself with what's going on in the pound odd. So there are kind of big divergences between these three currency pairs. But I'm not that interested on shorting. I see pound yen and pound dollar at resistance. I don't see it pound odd, and it is at 21 EMA. But considering the divergence, I think that I would not look for downside on the pound odd. If I'm looking for upside on the pound, it would be on the pound odd. If I'm looking for downside on the pound, it would be pound yen or pound dollar. They look bearish to me. Pound odd is bearish, but is reversing, I think. My 2 cents. You can see also how nicely the fibs work from 38.2 fib down to the minus 272 target. I'm not interested in a dollar CAD. There's divergence, double divergence, and it keeps moving down. I would like to see price above the 21 EMA, above this resistance, but until that, I'm not that interested. And I'm not really looking forward to this pair. If it does show some potential reversal signs, great, but not counting on it that much. Kiwi. Yucky chart. I don't like it. It's at resistance, trying to poke through. Finally, the 144 basically, sorry. I don't like it. Too choppy. What else? Dollar Swiss, you haven't looked at it for a while here. Looking at the 4-hour chart, it too, and the daily chart just looks messy. Not interested in that one myself. Well, many of these charts are showing interesting ups and downs, rotating very quickly, one following the other. And it all looks like we end up back to the 144. It really doesn't look like it can even exceed it at this moment, this long, big consolidation zone here. It's just not too appealing for me. All right, pound New Zealand is back at the long-term moving average. So that too is showing divergence between these bottoms. Similar like the pound odd, it is actually at the moment where trading with the downtrend, I think, is risky. The reversal upside is not ready yet, in my opinion. Well, on a 4-hour chart, that could be a bit different, by the way. The daily chart, not yet, but the 4-hour chart. I don't like the fact that there's no divergence between these bottoms. So that would make me, if there was divergence, I would say that this is a potential reversal trade up to the long-term moving average, but it doesn't, so therefore I'm cautious. But there is, I mean, otherwise there would be, I think, a pretty interesting zigzag potential here. But the divergence is really lacking on the 4-hour chart. There is divergence on the daily chart. But for that really to take place, I don't know. We'd like to have at least the 8 EMA up. No, that's too soon. You see? So nothing really matches here, I think, on the... No, not yet. All right. Pound specifically had resistance as well. So these pound charts are showing a lot of mixtures here. Alrighty. New Zealand CAD was falling a lot last week, made a significant rally back up actually. A lot further than I would expect. Right back to the 144. That turned out to be resistance. And it would be nice to have a couple of candles below it here. Hook back, and I think there could be an interesting short like that. There is a bit of odd strength here. Yesterday, bullish day, broke out of this resistance trend line versus New Zealand. Now we're looking at pairs that I don't really look at too often, so let me refresh this. Now, I'm not personally a fan of these CADs, the Swissy, at this moment. So let me give you well, let's take a quick look at the instruments and I'll make a summary. Oil nicely rallying up to close to 40 at the moment. And we're looking at this daily chart. We did have here the sixth candle not breaking this bottom. 1, 2, 3, 4, 5 weeks not breaking this bottom. And indeed last week was therefore also very strong. That was the 6th week. So it looks like we're going to get a bigger rally at the moment. Retracement. And well, if it follows the same rules as currencies, then it could go up to 62.50 before finding this resistance and the long-term moving averages. And I guess from that point of view, wouldn't be surprised maybe to see a bit of ABC zigzag like that. Got good momentum going on here, so something like that wouldn't surprise me. I think we'll get back in a bit of a bullish territory probably on oil. Just my 2 cents. All right, gold, shallow fib retracement, didn't get to the 38.2 fib, but now indeed, as we were saying, probably going up to the minus 272 target. So we're kind of following that. Price back to 2000 on the S&P and the 61.8 fib. I think that could be a bit of a resistance spot for dip down at, I would say. All right, so let me take a summary now. Let's go back to the euro dollar. I was saying euro dollar could be a good trade if you're in that trade off of the fibs that I talked about yesterday. Break even, I think, move to break even and see if this 4-hour candle closes bullish. All right, if it doesn't, it might be even good to move the trail stop below these candle lows right here, these 4 candles. If this closes bullish, that could be a new setup with 111, 111.75 as a target. If it doesn't, good reason to be cautious and not take that trade. Pound USD, and who knows, I wouldn't trade it, but price might retrace deeper. Price might retrace down to the 61.8 fib. Kind of fail here and then go up like that. But I would still be more interested in this bounce with the blue circle. All right, that's one. Pound USD, not interested in long unless, well, basically, it would really need to break with a couple of daily candles above the 21 EMA, then make a bull flag, and then continue. That's not going to happen soon, as you can imagine. What I am interested in is if price makes it up to basically down here, makes a pullback, and then continues. I'm interested in the pullback continuation. Or if it fails here with 5 to 6 candles not breaking this high, that could be an early solution. So I'm looking for downside. Dollar yen. If it pulls back a bit higher, then continues, or if it breaks and then pull back to 21 EMA and then turns back down. So I am bearish on this one, looking for downtrend continuation. Pound yen, same. Basically, dollar yen I see down. Pound USD I see resistance. So obviously I see pound yen resistance too. And break, pullback continuation looks good. Same for the euro yen. Odd USD, I'm looking for a pullback for upside continuation. And I think those are the most interesting pairs. The other ones, like the Kiwi, dollar CAD, pound odd, euro odd, do not look interesting for me at the moment. Pound odd and euro odd do have a chance of eventually getting a bigger zigzag, but I don't think it's going to happen soon. I think we're first going to see price make a dip and then a failure before we see some upside. So it's going to take some time. Yeah, that's basically what I'm seeing at this moment. Any questions, anything you want to discuss, from a trade management point of view, or you're looking at a new setup and you're thinking, boy, is this interesting or not? What would Chris think? Let me ask him. Please go ahead and be my guest. Please ask me about potential setups, open setups, new setups, or anything you might want to ask about technicals. This is the moment. And if you're interested in more webinars, please take a look at, it seems like I don't have that link open. Oh, here we go. Sorry. Please feel free to join Nanet's Price Action Trading School on Pivot Points, the advanced session. And he has it at 5 p.m. I'm a bit surprised. It's a bit earlier than usual. So apparently 1 hour earlier than usual. I hope that's not a mistake, but if That's what it says here. Tomorrow we have the same time, same place strategy. We have Thursday evening, understanding how leverage works and setting up a feedback cycle. And then next week, the same schedule. So today and Thursday, we got education, and tomorrow one more strategy webinar. You also might want to take a look at this correlation tool, by the way, and you see the sentiment here. And, me looking for upside, as you can see, not very popular thought, 37% versus 63. But I do see upside gold as well, and that seems to be a majority of the traders as well, 82%. Most traders are indeed bearish on dollar yen, but pound is very 50-50, as you can see. Euro yen is, there are more longs. Pound yen, there are definitely more shorts. Aussie, I'm bullish, but that's just a narrow majority here. So, yeah, it's sometimes interesting. I would say don't base your trading plan or get worried about any ideas necessarily, but it can be sometimes interesting to take a look, just like the market heat map. All right, your dollar, I'm not so sure about that bearishness. At the moment, I just see a pretty good momentum up here, but maybe I'm the only one who sees that. I also see a break above this resistance. And if I see momentum here, I think that could be an A. Or this probably a B, and we might be in a C or soon will be in a C. So I think that the upside looks pretty good to me. But obviously if it breaks to this bottom, then I can throw out that analysis. All right, no questions. Well, that's great. Everything's clear. Perfect. I hope that this webinar was helpful for you to see my thoughts, and hope to see you tomorrow, and wish you all great trading. Cheers, everyone.